Great, thank you very much. Well, good afternoon, everyone, and welcome to this first session of the afternoon. Thank you for finishing your lunch promptly and coming down here. Today we're going to be talking about AI ghosts in the machine, and I'm deeply honoured to be joined today by three people who probably do know what they're talking about from this, and I'm going to ask them quickly to introduce themselves, starting with, actually, perhaps, could you briefly touch this?
Okay, can you hear me now? Great. So I am Aberneithy, CEO of Analytic.ai, and we help the world's largest forex brokers optimize their hedging strategies using AI and behavioral finance.
Okay, Tom?
Hello, my name's Tom Middleton. Wow, this works. I am Global Head of Quantitative Services at Itarle AG. We provide outsourced algorithms for multi-assets to global banks and brokers as a software as a service product.
Hi everyone, I'm Amanda West. I work for Refinitiv, which used to be known as Thomson Reuters. So recently we've become Refinitiv. I'm Global Head of Innovation. We run 4 labs globally, and the bulk of the work that we do in the labs is around machine learning these days. And we've used many of the machine learning techniques to sort of build and run our business for quite a number of years. So we've got a fair bit of experience of the world of AI.
Lovely. Thank you very much. Before we carry on, I'd just like to say, if you do have any questions, I think you can submit them, Jonathan, via Slido, is that right? So please do submit any questions that you may have, and hopefully we'll get around to looking at those. And I hope, secondly, we have an initial question for you to answer, to look at. Jonathan, do we have that? Before we carry on, hopefully. If you have downloaded the Slido app, you should be able to do this. Right, well, never mind. So, we're going to start with hopefully a question that I think everyone will have on their lips, which is, what is the current impact of AI and where do its main applications lie in FS today? I think, Ashley, perhaps we could start with you on this one.
Thanks. So the main impacts of AI that I see in the current day, in the financial services sector are, it's really based on the sophistication of the firm, right? Some firms are very technologically focused. Some are very up for trying new things, trying new ways of increasing revenues, say. And some are, it's a scale. So some are not using AI at all. Some are fully AI, or a large portion of their operations may be using AI already. So my background is in risk management using AI, which is a fairly new field, but we're already supporting some of the largest brokers in the industry. So that's a testament to how AI is being used. Investment banks, for example, I've heard recently are starting to use things like natural language processing to analyze like revenue reports from companies. So, instead of having an analyst listen to all of the kind of corporate comms and the tone at which the board are talking about the revenues of their company, they'll use AI to just process those reports, convert them to text, and look at the tone that's coming out in those reports and using that into maybe their prop trading model. So it really depends. There's a sliding scale.
Tom, anything?
Yeah, I think those are very valid points. I'd say, obviously machine learning techniques have been used for a very long time, and perhaps but qualitatively to me, they're not different from the older school quantitative models. I think if you look at, typically where AI touches on your daily life, it's typically doing something better that human beings are already quite good at, or doing the same thing but in a much more scalable way. So in the best spirit of cyber stalking, Ashley, I looked at your website, and as I understand it, effectively you're helping your clients to pick out who are their toxic clients. Now that's something that a decent market maker can do, but the difference is now is that's being done better in a much more scalable way. And likewise, your example there was very good in that, reading research reports, again too, that's something humans are pretty good at. You just need a lot of them to do it, and computers are a much more scalable and cheap way of doing it. So I think those are the areas where we'll see the improvement. The trading strategies, well, I'm sure we've got the best traders in the room here, but typically human beings are pretty bad at price prediction. And, not saying it's never going to improve, but I can see the models too, or most models or most AI strategies will also probably be pretty bad at price prediction. There'll be a few that are good, of course, just the same way that there are a few, very, very talented human beings. But in terms of what's going to really move the dial, I think it's in improving and making more scalable the areas that human beings are already pretty good at.
Okay. And Amanda, you very specifically highlighted machine learning in your introduction.
Yeah. So we've got, as I say, quite a long history of trying to employ AI to really run our core business. So we're a content company. You'd sort of expect us to have focused on these techniques for some while. I was going to come back actually first off to something that Ash said. So we've got a tagging service that we've trained on various data sets. And as Ash says, you can use it on research, on earnings, on sort of unstructured data. Obviously, we first applied it to our news, being, again, a news company. And based on those tags, you can then derive sentiment and use that to sort of inform your business. I think the really interesting thing for most of these techniques is that in order to make them really valid and valuable for your business, you actually really need to understand the domain that you are applying them to in masses of detail. And so one of the things that we've learned over the years, this tagging service that's been around quite a while, and we've probably been applying it to data sets for about 7 or 8 years now. The value that we bring there is much, much more about how we've taught it and how it's now really good at expertly tagging these data sets. And therefore, they then become super, super valuable. But often that's quite a long journey. And I think that's where sort of AI generally is actually quite hard to operationalize often. It's easy to talk about. It's really quite tricky to operationalize because you have to understand both the technology and the domain or the business that you're trying to apply it to. So that will be my sort of thought for the day, is that you really need to be a domain expert to make it work. And the quality of the underlying data will determine whether your AI, whatever techniques you're using, it will be of value or not.
Okay, great. We just had the results now gone up on the screen about the biggest benefits in the market. Data analytics, I think perhaps unsurprisingly, coming out at the top. Robo-advisors down the bottom at 11%. Anyone like to comment on that?
I think perhaps we should have had a question first, was that are robo-advisors AI? And I think, effectively they're encoding what a financial advisor would do, really. So I would say that there is some way to go before they become AI. And I think if you look at the sheer scale you have to make any money in that, really, I think that's very much an unproven thing at the moment.
Can I add to that? Yeah. I was going to say as well, I think it's sort of got slightly overhyped a few years ago, and that people are literally bored of talking about robo-advisory. And in some instances, I think it is operational and working, but in reality, I think people have moved on, and I think they're much, much more focused on the analytics element now.
Okay. So it seems that the audience agreed with the panel, which is a good place to be. Okay. Right, so moving on. We had down as our second question, a question about what assessment there is on the adoption of algorithms and trading by retail and institutional investors. Sorry. So, Tom, why don't you have a start with this one?
Yeah. So I think first of all, I mean, if you look at when we think about trading and investment in a quantitative way, I think before we start thinking about AI. So, typically you've got longer-term investors that in the equity space are looking at fundamentals and futures. Obviously, this is very, very broad brush, but we haven't got several days. That in the equity space are looking at fundamentals, and futures and currencies are maybe looking more at kind of mean reversionary or trend-following tactics over a much longer time scale. Then, the natural evolution from that longer-term quantitative investment was what's now called smart beta, which is, without wanting to be too cynical, that's quantitative investment when it stops working so well. And then you kind of have the medium frequency, the HFT people that again are typically looking at, or typically historically really have looked at price and volume data. And then, our business at Itarle is an outsourced execution algo provider. You have the execution algorithms, which have some overlap with HFT. We are operating in that high frequency space, and then the smart order routing too. So you have, how am I going to break up my order, and how am I going to choose what venue to go to? Now, I would say that the applicability of AI really is at either end of those timescales. So very much as we're saying, your quantitative investment is increasingly looking at unstructured, less regular, less easy to interpret data. So that used to be, you get a spreadsheet of fundamentals and you click refresh and you decide what you're going to buy and hold for the next month. Obviously as that goes on, that becomes a more and more crowded space, so that becomes smart beta. And then you have to look at something else, and that's your unstructured data, looking at alternative data sources. So now the competition is in a sense in that space is what data set can I get that someone else doesn't have, and how do I then interpret that? And often that will be somewhere where more of the AI applies. At the other end of the spectrum, algo execution, we've used machine learning in that for many years. It's a question of working out, do I wait on the bid or do I pay the offer, effectively, or when's the optimal time to do that? Smart order routing, if I'm seeing a better hit rate, if I'm getting filled more at a particular venue, how do I learn from that, adapt from that, and realize what's statistically significant? So it's those two applications really are the main ones. And then of course with MiFID II, there is it's much harder to have research analysts. There are a lot fewer research analysts around. So again, that needs to be scalable. And as we said before, processing that large amount of unstructured data is where AI can help.
Okay. Ash.
Sure. So from the trading data that I see, we personally, our company uses AI to analyze kind of historical trading flow and behaviors within that flow, but we don't we're not active market participants. So I'm coming at it from that angle. But we see in the trading strategies that people use an increasing adoption of AI. So we're seeing very kind of like adaptive strategies that are able to quite significantly change depending on the market at that point in time. And obviously we don't know if that's to do with an AI in the background or whether that's some human maybe executing it. But our general feeling is that AI is even retail traders are starting to use AI more than basic linear kind of trading strategies.
And Amanda, from
yeah, no, I'd really agree with that. I think as well, if you look at many of what we would call in our business sort of the tier one companies, the bigger institutions, we did a really quick and dirty piece of work probably about a month ago where literally a graduate trainee spent 2 hours looking on LinkedIn and in companies' websites to see what level of hiring was going on. And in that 2 hours, so this is across about 20 accounts, we would call them our key accounts, he found 364 job opportunities for people who were called sort of data scientist or machine learning or AI. They had those associated in their names. So the big boys are really hiring like mad, and they're mostly doing it in the front office in order to really try and help themselves understand whether there's genuine alpha to be got from sort of thinking differently about how to drive their trading strategies. So that's one data point. My other data point would be that we've been doing an enormous amount of work with the cloud providers, because obviously when you get into the genuinely sort of medium to big sizes of data, you need compute to help you actually even trial, let alone execute, but even sort of create your new models and validate them. And so in the FX space, we've been working with various big customers for probably a couple of years, doing work, utilizing cloud compute and also the really quite sophisticated AI capabilities that many of the cloud providers have. So they're out there, but it's still quite early days, I would argue, in terms of people being able to actually operationalize the models they're creating.
Okay. And I think in and amongst what we've just been discussing, sort of trading strategies clearly have been high on that list. What do you see in the back office arena? Do you see anything happening back there at all in this area?
So my own personal knowledge of the back office probably isn't fantastic. We are seeing a lot sort of in the mid to back. We are seeing an enormous amount around financial crime. So we have various assets that play into sort of the risk space, but the risk space in terms of AML, KYC, sort of onboarding of customers. And I was saying just before we came on, we're working with one of the big Asia regulators on some really quite sophisticated risk scoring. And the risk scoring is pretty much, if you think about sort of Facebook or Amazon, and how we all get scored one way or another, and then things happen to us as we are scored. We're applying those sorts of techniques to entity information in financial services that will give you a much better sense of, is entity A connected to any other entity that might make them a little bit risky in terms of you onboarding. But that really does demand some very sophisticated modeling and then some really careful explanation of how you've created that model. So we're doing quite a lot of work there as well.
Any further thoughts on that?
Yeah, so I think, as with the poll, the fraud detection area is the non-front office area where I've seen it the most. So at a former employer I heard that they got in a well-known AI firm, gave them all the trading data in Delta One trading, I think, and said, right, find the rogue trader in there, and they did.
Yeah.
So I think that was very much proven to work, and they brought them on as another layer on that, because again, at that particular firm, I think 10 years ago there were 2 support staff for every trader. Now there are 4, and as each issue comes along, or each bit of read across, whether it's at that particular bank or another one, there's another layer of control added, and it's simply not sustainable. But again, it's a question of automating what humans do pretty well already, or can do already, but making that scalable.
Okay. All right. Good. So as time is already beginning to move on. So our final question, I want to split into 2 parts, because it's really what predictions are there for AI, and what timescales are there for it. So perhaps let's start with predictions. Who would like to predict what's going to happen in AI?
So, I mean, this is always a dangerous topic. Right, I think the best way to predict this is to actually give a reasonable timescale here. So, if we're taking, say, the next 5 years. So the next 5 years, I think, from my perspective anyway, a lot of functions like risk management trading, back office, customer support, that kind of thing, will heavily utilize AI. if you're not using AI in those fields, you'll be kind of the outside case. Like it will become so natural. It'll be like using Excel or something. It will just be a natural tool. One of the risk managers we work with, actually, he's kind of like a young guy, and he's only ever worked with AI tools. And it's so surreal, because they phone us up and they say, oh, can the AI do this type of prediction? And I'm like, well, you're asking us to kind of almost build a time machine and go back in time and predict based on having very little data. But it's that kind of case that we're going to see more and more, where people become AI natives, and they're just used to the AIs doing stuff, doing tasks for them. So that's the kind of 5-year prediction. We'll just see a lot more AI involved in most of the aspects of running financial institutions.
Okay, Amanda, how about you?
I take a sort of just slightly different tack. I think companies will automate lots and lots of tasks. That's sort of simple in lots of ways, and there's heaps of runway for automation. And again, if I look back at what we've done, obviously we have this big content factory, and we use these techniques to do things like fill pricing. Where we haven't got prices, we'll put in synthetic pricing into, and mark them as synthetic. But we've applied machine learning to lots and lots of our content factory. So I think most companies will really focus on using the technology to automate. I do think it's going to take a lot longer for the alpha generation side, because I think most people's data isn't in a fit state to drive it. And I think that will take quite a while for companies to sort through. I would also just add one maybe slightly controversial element, which is I'm not sure about the value of alternative data, because we have a theory. Most of our customers, when we talk to them about it, don't want us talking about it, because as soon as we've put it out there, it's no longer alternative fundamentally. It's out there and available to quite large numbers of people. But actually, we're not seeing enough use cases where the value lasts for long enough to make the work involved in utilizing the data always as apparent as one would like.
I'm sure.
I think from an alpha generation perspective, I think that I can't see in 5 years' time. I hope no one's taking notes, just in case I'm wrong. I can't see in 5 years' time we will be or 10 years' time, we'll be in a qualitatively different place to what we are now. Quantitative investing has been around in some form for many years. It can't all work, and I think it will be the same with AI. I think, as Ashley said, AI is going to be much, in terms of the impact that we'll all feel, it's going to be much more about the tools that are on offer. But ultimately, those tools will be mostly, not proprietary, will be out there, so the playing field will be level. The market may be more efficient from it, but it's not going to be qualitatively different. After all, everyone's got Google on their desktop, and there's some AI in there, I believe. That makes it easy to find information. It makes it quicker. Human beings are also very good at going to the library and getting a book out, but Google's a bit quicker. So there's that aspect of it. I think the support functions to the front office and sales and research, I think, will probably be more impacted, perhaps, just because there are a lot of very automatable and scalable tasks there. In my last place, I was in structured derivatives, and there was a lot of work all the time, reconciling two sides of the same trade because they were booked slightly differently, and the whole system fell over because of that. Now, an AI should be able to match those, and it's that is something that is a very tractable problem, and it's very easy to tell whether it's right or not. Market prediction, the market is always fluid. It's much harder, you don't have a training set that is always going to be the right training set to use. So I think alpha is going to be qualitatively the same. support functions less so.
Okay. And before going on to one final thing, you've mentioned alpha, all of you. When does beta begin? When does that generation hit?
Well, so it started out, and at one point everyone believed that stock pickers just had alpha, and then someone came along and worked out the market beta, and then someone came along and said, well, actually the size of the company is important too, and then gradually, more and more looks like a premium taken for taking risk rather than the ability to forecast the excess returns of an asset. So I would say if you want to forecast, we'll probably see that that alpha will get squeezed more and more. But I think once you get into smart beta, it becomes an academic debate to a degree as to whether it's a risk premium or whether it's alpha or whether it's just noise that you're in the right market environment. Last year, selling a leverage bet on volatility was a great bet. Not so much this year, and that is marketed as a smart, or was that particular product, also from a former employee, was marketed as it wasn't marketed as smart beta, but a lot of people looked at that as smart beta. So in terms of where does beta begin, I think the frontier will erode more and more of what is seen as alpha.
All right. Well, we've now got left time for a couple of questions. So I think we might as well take them in order. So how long does it typically take to train a seasoned person for AI? Right. Who? Ash.
It really depends on the complexity of the problem. So how long does it's a very open-ended question. I think the one thing that we do quite well in Analytic.ai is building a process around building models rather than working out how long it's going to take specifically to train one model. So, we do maybe 1,000 back tests a day. We do maybe 1,000, we build 1,000 models and we will back test 1,000 models every day. But having a whole infrastructure to support that, that's a lot of compute power to do that. Having that process allows us to bring our models to market much more quickly than others in the industry. So I think it's not really answering your question, but it's all about the process you have rather than how long it takes.
I'd say always longer than you imagine. I'll give you an example. We launched a service called Media Check fairly recently, which is essentially literally scraping public data, but it's then applying it and linking it to our entity data, so companies, people, whatever. And it was built off technology that we understood, it's public data, but because we were looking at so many different sources, the training element took way, way longer than we had anticipated, probably a good 6 months longer. But that training was, going to determine the success or not of the service. So we just kept at it. And now it's out there, it's great, but it took way longer than we'd imagined. And it's until you get into the data that you've no idea really how clean it's going to be or not.
Okay. And Thomas, is this a fail-fast situation?
Sorry, say again?
Is this a fail-fast? You do it regularly and quickly, or?
Yes. I think. Well, it will depend to some degree on the time scale of the data you're looking at. So in your example, earning data is much less frequent than level 2 order book data. So your approach may be different. And I think in that case, again, you may struggle. That may be a particularly hard problem for AI because it's got very few data points, and so during that data, the market environment may change a lot. And obviously, you can add more and more parameters to the model, but then you're overfitting effectively, or you risk overfitting to the data. Whereas 2 weeks, 2 weeks very high frequency data, you may apply it to that. It may take in terms of the amount of your time it takes, maybe large or small, depending on whether you crack it fairly easily, and you'll also know when you start trading it whether it works or not fairly rapidly because you're going to be playing the bet a lot more often.
Okay, good. Right, well, I think that pretty much brings us to the end of our time. So, Angela, firstly, thank you very much for coming. I am, of course, as I always am, humbled by the work and effort that people put into these things. I think we've had 3 fantastic panelists to guide us through this exciting area. From my own point, I think I'd make one final point, and that is that everyone always overestimate what IT will do in 2 years and underestimate what it does in 5. So let's see if that's the case. But I hope you will join me in thanking our fantastic panelists for being with us today.